Welcome to Escape the Rat Race Radio, Dharmesh. How are you today?
I'm wonderful. Thanks for having me.
Yeah, really, really good to see you again. And it was only about 3 weeks ago when we actually first met up for the first time. I headed over to your offices over in East London, and it was great to see everyone there working away. And we hung out and had a little chat for a while. And I thought it'd be wonderful to have you on the show today to share your wonderful knowledge and wisdom around lean thinking and helping aspiring entrepreneurs really get started in business.
Yeah, so, more than happy to.
Yeah, so Dharmesh, let's jump straight in. And would you mind letting everybody know a little bit more about your involvement with Forward Partners, and specifically, how do you help early stage entrepreneurs in launching a successful business?
Yeah, okay. So Forward Partners is an early stage VC firm, but we're different in the sense that we have a startup studio that works together. So we basically invest in and uniquely into founders that have ideas. They can be pre-product, pre-traction, pre-team, just themselves and an idea. And we invest up to £300,000 in those founders. And then they come and work together with us for 12 months. And I basically run a team of product engineers, design, UX, growth, PR, talent, who basically work together with the founder to build their company for the first 12 months. On top of that, we have seed stage companies that we also support. And we help them with consultancy and lots of other pieces that they need. So, but I guess for your audience, you know, I've worked since the last 5 years with over 20 different founders, launching companies and helping them grow. So.
Yeah, fantastic. Yeah. And there may be some terminology today, some language that crops up, which people might not be completely clear with. So let's clear that up straight away. And these could be terms like VCs, venture capital, and stuff like lean thinking. So give us just a little bit of a summary as to what those terms mean in your world.
So venture capital, so the VC is, and so this will help some people, very big companies with big exits, because of the way that their business model works. You know, we will work with maybe 30 or 40 companies over the space of 4 or 5 years. And some of them will succeed, some of them will do really well. And the nature of venture capital is, so our fund is a £60 million fund. Every time we make an investment, we're always thinking, if we take a certain percentage of that company, how big can this company get? And we need to believe that we can get a return of £60 million from that exit. So if you think about that, like if you have 10% of a company, that means, you know, they need to exit for £600 million. So we have to have a belief that in the most optimal case, that is the kind of outcome. So we very often get founders coming to us and we say, no, we won't invest in this company. And they think it's because we don't think their idea is good. And very often it's just that, look, your idea is great and you probably can make a success of it. It's just that it may not be big enough for venture capital. And I think that's a different, you know, an angel will have a very different view than what a venture capital will have.
Right. Well, let's just define what an angel is then.
Okay, so angel investors are, so generally they are individuals who, you know, high net worth individuals. They will have some money, and normally they will try to be the first investor in a company, and you know, very different. So that's their own money they're putting into another founder's idea. So they will be working very closely. They probably won't have deep pockets to continue to invest in your company. They may make only a few investments. Maybe they're experts in a certain domain, and so they'll try to leverage that and make investments where they think that they can help. Venture capital has way more money to invest, can follow on more deeply, and an angel might be very happy to say, you know what, if you want to exit this company in 4 years for £50 million, I'm okay with that. You know, I'm doing this. Or they might have slightly different motivations. Venture capitalists want to back founders that have very big opportunities, going after big opportunities.
Yeah, well, that's brilliant. Thank you for clarifying that. And the topic of our conversation today is really going to be around this term lean thinking. So what does that mean?
So, you know, I guess in my view, you know, people have ideas and ideas for startups, and being lean is thinking about, you know, what's the minimum I need to do to get this idea out into the world, because what I'm actually doing is I'm trying to find out what is the successful sort of what is the shape of my startup in order for it to be successful. And I'm starting out from a basis that I don't really know. And so what I need to do is learn very, very quickly, and try things out in order to basically find out what is that sort of startup that is able to grow very fast. And so lean thinking is a way of basically going, you don't really know, you might have an idea. What you want to do is get it out quickly into the market, test it, learn, iterate, and sort of bend and sway a little bit in order to find that bigger opportunity.
Yeah, that's brilliant. It makes me think, you see the kind of infographic online of ready, fire, aim. It's just, put something out there and make it perfect later. Because I guess in your experience, there's a lot of people who want something to be perfect before they release it. And that could never happen, right?
Yeah. Like the number of founders that I see that, they just think this is my baby, but when it goes out in the world, it has to be perfect. And then, no product survives first contact with your customers. So, you've spent a lot of time perfecting the wrong thing.
Yeah.
So, that is the danger. And, you get I see a lot of founders who are like, yeah, I'm being lean, but I spent 2 years building this. And I'm like, well, that doesn't sound right, does it? That doesn't sound like you're being lean at all.
Yeah. And a previous guest of mine on the show, in fact, a previous mentor of mine, Roger Hamilton, he always said, you don't have a business when you have a product, you have a business when you have a customer. Yeah. So it really is your customers that are number one here. So Dharmesh, could you tell us a little bit more about yourself in terms of your background, education, experience in lean thinking? How did you get started in all of this?
Okay, how far do you want to go back? So I mean, basically, I studied computer science purely because I played a lot of computer games as a child and I didn't really know what to do. So I studied computer science, and then I did a master's in artificial intelligence in 1998, I think. So kind of the first wave of AI before it was kind of ready, just because it sounded cool and it was interesting. And then when I left, I was still in the .com first boom. So I graduated and worked for a computer games company that raised lots of money to sort of take their AI technology and use it in different industries. So it was a very interesting and fun place to start a career. The company was called CyberLife. It just had a cool name and it was like, fun. And then I basically worked in different companies making virtual pet games. I don't know why, that just happened to be my career choice. And then the .com crash happened. I was still being a software developer, but now I worked at the BBC on I don't know if you remember the Hitchhiker's Guide to the Galaxy.
I do.
So I worked on they basically were making an online version of the Guide to the Universe. It was a bit like the precursor to Wikipedia. And it was, at that time, social software and user-generated content communities was what the internet was kind of exploiting a lot. Lots of ideas around that. So I kind of moved away from AI and moved into that space because I found it very interesting. And then suddenly realized that, there are better engineers out there than me. I wasn't a bad engineer, but there were better ones out there. And I was better working on the kind of the product side and marrying business and technology and the ideas and the experience and how to do all that. And so I kind of, changed into that direction, doing product. I then ran my own startup, doing kind of virtual pets that run around your desktop, which I built for a year with some friends and then, destroyed my mind and body. And then, after a year, we closed it down, didn't have a clue what we were doing. Continued to work in the tech industry doing product. And then I decided to escape the rat race and I moved to Italy to live on a beach and do nothing for 3 years, just finding whatever work I could find. And in that time, I basically was like, well, how could I stay in a place like, I was living on the beach in Sardinia. How can I stay here? Because the economy is so bad in Italy, I didn't know how to make it work. I was just doing like boring websites and things. So I had an idea for a startup. I raised some money from a friend, started building it myself using freelancers and contractors as well to help me all over the world. Managed to grow it, raised the seed round, which was basically more money from someone, and had sales teams in 3 different countries. And then sort of after about 1.5 years, I was getting very burnt out and kind of realized I'm very happy that this thing exists. I'm not sure that I want to then run it for the next 7-8 years because it was a very sales oriented business, which isn't what I envisaged at the beginning. And so I managed to sell it to a company in New Zealand. And then I got offered a job in London making virtual pet games for children called Moshi Monsters. So there was a running theme of virtual pets, and I thought, oh, this is interesting. So joined that as a very early employee, doing product. There was 20 people, and then that went on to, in 3 years, grow to a 300-person company. Was very successful for a moment. Mushy Monsters was everywhere in the world. I learned a hell of a lot. And then when I left there, I was just thinking I wasn't really sure what to do. And I met Nick Brisbane, who's the managing partner of Forward Partners, where I am now. And he just literally started this sort of VC plus execution startup studio. And we met, and my experiences of high growth startups plus having my own startup, he was like, hey, do you want to come and help me do this? And running the startup studio. And so 5 years ago, I joined Forward Partners, and we've sort of worked on the first company. It worked. We took that company from a guy with an idea to, still running now, 5 years on. I'm now on his board, helping him, and we've done it, 20 times since. So I guess taking that experience of when I did my own startup, I wish that Forward Partners had existed, because I would have executed better on it.
Yeah. Well, that is some story. And I hope everyone listening now is certain that we are talking to the right guy when it comes to helping entrepreneurs launch a successful business. You've truly been in the trenches there and absolutely done everything that you now help others to do successfully as well.
Yeah, I still have RSI from my first startup.
So Dharmesh, for those people listening right now, who many will still be in 9-to-5 jobs, but they've got that golden idea in their heads and they maybe have taken some first steps with it. But what is truly, in your mind, the first step that an early stage entrepreneur needs to take when evaluating a new business idea?
Yeah, so we use a few tools here at Forward Partners, and so there is this. So when we invest in companies, we meet a founder who's gone through this process of, in some ways, evaluating their startup idea. So we will invest when they can clearly explain what the problem is and what the solution is. But the journey to get to that point is actually variable. Sometimes someone might be doing that for 2 years. They might be doing it for 3 months. But there are ways to accelerate it, I think. So we use a tool called the Lean Canvas, which is just like business plans are not really very useful these days. The Lean Canvas is a very clean tool, easy tool to just think about all different aspects of your business. So it's just basically like a square with some boxes in it. One box will say, what is the problem you're trying to solve? Who are the customers? What are the channels that you will reach your customers? What channels would you use? What's the solution? What's your revenue and what's your cost structure? And you start off with an empty sheet, and then you can start writing down what you think your idea might be. And you'll have lots of empty boxes in that canvas. And so my big philosophy is, the first thing that you really will do is, when you write down the problem, do you really understand that problem well enough to come up with an innovative solution? And what I find is most founders don't understand it well enough, understand the nuances, and they jump too quickly into building a solution without doing a step. And it's relatively easy, and it's basically find 10 to 20 people who have experienced the problem that you are trying to solve, and then ask them to talk through their experiences of solving that problem. What was the first point that they tried to solve it? What was the trigger that caused the problem in the first place? What were all the different things, step by step, that they went through using the other solutions out there in the market? And just by doing that alone, you start to build up like a much deeper sort of understanding of what the real problems are that they might have. And you're not asking them for solutions. You're not saying, what would you wish you had? Because they don't know technology. They don't understand what's possible. But you will develop like an internal sense of whether your idea is really like targeting a real problem. And so that's the first thing to do, right? Go and talk to people, understand how to ask. So lots of founders go to people and say, do you like my idea? Here's my idea. Do you like it? And most people will just say, yes, I like it. Yes, that's a problem. I'd use it. That doesn't really give you lots of good information. But when you ask someone who has just tried to solve that same problem, if you can't find any, that gives you some indication, right? That is there really a problem? I can't even find people that have done it. And then get them to talk through it. And then you'll start to really understand which parts are being solved already very happily, and which parts there's lots of opportunity for you to make more efficient or better, etc. So that immediately starts to fill out your canvas with, I know what the problem is, I know what my customers look like, I know what channels they might use to solve that problem. Where did they look? Did they look online for a solution? Did they look in a magazine? Was it a friend that told them? That kind of thing. And then the solution is where you need to start thinking about, well, what is that solution going to be? So the techniques we use internally, we might create a landing page, which just helps us explain what that idea might be. And we might drive some traffic to it, or find ways to get people to register some interest. That will give you a little clue of whether you've got a strong idea. We might build a prototype, which is, there's lots of tools now that let you kind of, without writing any software, you can design, your product, whatever that might be, using a design tool, just the kind of pages and what they look like, and make them clickable. So Marvel and InVision are both tools that let you do that. And then you can actually show people and go, would you use this, and watch their reaction. So you've moved from asking people about their past experiences of their problems, that if that comes back with a clear signal that there is a clear problem, and now you've created had lots of ideas and created some prototypes, and you've now put it back into their hands, and then you get a reaction of, this is great, this is amazing, when is this going to be out? You've got another clue. If they don't, you haven't wasted a lot of money and energy trying to find developers and trying to find, you've started to test your idea really quickly. We use a workshop format internally called a design sprint format. It's like a 5-day workshop. The first day you kind of look at all the research that you've done, look at the customers, look at the competitors in the space. The second day you generate lots of ideas. The third day you start to whittle down the ideas, and then on the fourth and fifth day you build a prototype. And on the fifth day you test it with some people. So you very quickly go from an idea to a prototype and back out and to get some real feedback. Once you've got a positive kind of signal from your prototypes, then you need to think about, okay, what is the piece of software that I can launch that will let me get some real customers? And depending on the type of, and I'm talking about software businesses, but it could apply to others, it might be that I open a stall on the street and sell something, right? Like that could be the way to get your first customer. But for most digital products, it's, if it's an e-commerce thing, use Shopify, get an e-commerce store up quickly. Might not be perfect, you might not like it, but you can test more about, can I sell my product? Will people buy it? If it's there's lots of people that create Kickstarter campaigns for hardware projects. So because it's expensive to build hardware projects, so you do a Kickstarter campaign, sell the idea, people give you money, that's a test proof that they want it, then you use the money to go and build it. There's another way to do it. Sometimes you do have to write software, and I'm a big believer of, do things that don't scale. So, for example, if you're building a marketplace business like Airbnb, so marketplaces generally have buyers and sellers. So if you think about Airbnb today, it has, it's pretty automated. There's no one, you can speak directly to the sellers. You rarely ever talk to Airbnb and their customer services. It's all automated. But when they first launched, it probably was, you could send a message, maybe it went to Airbnb, who then tried to find a seller to match you and find your property. So that way you're not building a lot of software, you're doing a lot of manual stuff. And the benefit of that is you get a lot of direct contact with your early customers, and really understand the problems that they're facing. So, Airbnb was a classic example where, they launched this product, no one was really using it. And then they started to visit anyone that tried to use it and started to take photographs. And they realized that people were not taking good photographs of their properties. And so they went and took the photographs. They thought that that wasn't a scalable thing to do, but it really helped them understand all the concerns that people had. In fact, they still do that now at scale. They still provide you, if you want it, with a photographer. So, the do things don't scale actually has allowed them to scale. So, that's a good mantra to follow, is and a lot of the founders, one of the biggest pieces of help that I give them is, so a lot of the founders that we back are business experts, domain experts. We get some technology experts as well, but a lot of them, they get so worried about technology that they want to build all the technology because then it makes them feel happy. That like, oh, I feel comfortable now, like I've got all the technology. And the first thing I say is just don't build it, because like the worst thing is you build the wrong piece of software. That's way more of a drag on your business. So you're better off building less, doing more manual things. And then when you start to see what's working, you automate the things that are working. And that way you end up building the right product. So yeah, and then I guess for some companies, let's say, do you know the tool Slack?
I do, yes.
Tool, right? Like you can't do a concierge service of Slack. That doesn't work. You can't manually send messages around. It just doesn't make sense. So for those type of businesses, you have to build a bit more software. And generally you'll find a pattern with those kind of companies where they will have a closed kind of beta group, friends and family, or within a company, which is how Slack was created, where they will build the kind of the core products. And every product will have like some core loop that you go around, and they will build that rough and ready and play with it internally until they kind of feel like it's all working, and then they will commercialize it and then push it out into the world. So, you know, we've launched companies which follow a concierge model in maybe like 6 weeks. Ones that have more like the Slack type sort of, you know, use case, they take sort of between 3 to 6 months, but we'll do lots more prototyping up front to make ourselves comfortable that it's going to be a good idea. So that's, you know, depending on the product, there's a few different things you could do to stay very lean and learn without, you're basically trying to avoid building lots and lots of software.
Yeah, yeah. And the lean canvas model you've just explained there, does that work across products, services? Can any business sit down and create that plan?
Yeah, so, you know, there's nothing on there that is sort of specific to technology. It's what is the problem? Who are your customers? What's the solution? What are the channels that you're going to use to reach them? What's your cost structure going to be, and how much money are you going to make? What's your business model?
Yeah.
You know, like, so there's nothing there that is specific to any type of business. Mm-hmm. And it just allows you to go, what are the assumptions I'm making here? And have I thought about a way that I could test this quickly and get a clue?
Yeah, yeah. So when someone has gone through that process, Dharmesh, and obviously we both work with many startup aspiring entrepreneurs, and one of the challenges is being on your own, trying to do everything by yourself. And I know this is a big part of what Forward Partners offers, is that you say, hey, you know, come and be part of our team, you know. And how important is that for someone who's listening now, who maybe is feeling like they just don't have the time to do everything that they need to get done in their business? What would be one piece of advice of how to go about finding your team?
So, yeah, you know, so we're one solution, but, you know, we probably get, you know, 3,000 applications every year that we speak to, and we work with 6. So this isn't going to work for everyone. Doing it by yourself, and when I did my startup before, I was doing it by myself. That is a very challenging experience to do that. And that's why you find a lot of investors, and everyone says, find a co-founder, find one partner. You know, suddenly you've got a shared burden. You can share it together. And I think that that's quite important, to at least find someone that you can work with. If you can't, you know, get the money from somewhere and start to hire a team, etc. If you're still like trying to hustle your way through, then it's quite important to have some sounding boards. And it might be that actually, you know, you're doing it by yourself, but you can find advisors, right? You can find friends or people that have been successful in business and say, hey, I need a mentor, just someone to bounce ideas off. Because I think that even that alone is really powerful. So, you know, and actually you find it's really interesting in the tech space. There's so many people that have worked in successful startups that are happy to mentor for no real gain other new founders, because they were in that experience once before as well. You know, and I do that with some of my friends, like they're doing startups, and I just, you know, 1 hour a week, I'll have a conversation and just give them some advice and challenge their thinking, and, you know, it just stops you ending up in a little rabbit hole. So I think it's important to find some structure, whether it's a partner, you know, a co-founder, whether it's an advisor or a mentor, but something that allows you to get some sort of, you know, someone else to look at what you're doing and sort of prevent me from going down a rabbit hole. I think that's quite important.
Yeah, absolutely. And of course, you know, within Escape the Rat Race, we have peer group, we have the inner circle, and it's that touch point with others who are on the same journey, who have made those mistakes and learn, you know, how to rectify it. And it can shortcut your learning just by speaking to these people and, you know, sharing your individual skills, because we're all good at different things and we can help one another in areas that, you know, perhaps when we shouldn't be focusing on ourselves so much.
Yeah, and you know, I've got a number of friends that are part of like small pods where they kind of meet up once a month and all share and help each other and support each other, and that's another powerful way to, like, you know, keep yourself motivated and keep yourself going. You know, so yeah, anything like that is useful.
So do you have an interesting case study or a recent story of any of the companies, Dharmesh, you've worked with, which you can share how they've gone from literally just having an idea and very, very quickly, maybe, you know, within 12 months even, have used the lean startup process, lean thinking, and just implemented and have seen some success from that?
Yeah, so we have recently worked with a company called The Drop. So basically The Drop sell bespoke fitted suits online. And Jonathan, the founder, and Steve, who was the tech co-founder, so they were two, they came to us with this idea that they wanted to create an online business. His background was, he was basically making bespoke suits, but, you know, doing them at exhibitions and doing it in person. Everything was in person. And he noticed a trend that people were coming to him with pictures from Instagram and saying, I just want this suit. Can you make it for me? And so he already had the relationships in China of the factories and elsewhere in the world to help him make the suits. But he was like, you know, there's a wider opportunity here to do this at scale. And so he came to us. The initial version of the product, so we did a lean canvas as part of our investments. We always do a lean canvas. We identified, he filled in all the different areas. We challenged him on every part. You know, what were the assumptions in his business? Will people buy suits online, for example? How will they feel about measurements? Because that was like, how do you do that, right? Like, take measurements. And his idea was, if they send me 3 photos, I can actually calculate using their height and their waist, the actual measurements for the suits. And so we basically, before we invested, we asked him to do that for us. We sent him some photos. He made us the suit. It worked. They fitted. And then we came in when we invested in the company. We went and interviewed 20 or 30 people, some of his past customers that had done it in person. So there weren't any customers that were doing it online, but we found customers that were buying bespoke suits and trying to understand, like, what is it really that's going on? And, you know, you start to see some patterns that bespoke suits are really expensive for people that want them, like they're out of their price bracket. Lots of people want a bespoke suit. They understand that, like, a fitted suit is better. And the experience of buying a suit off the rack is not satisfying, because they have to go to the shops. They don't fit perfectly, and so that is what they've left with. And so you're just thinking, well, hold up, so here's a solution which will give them a fitted suit at the same price, and it's a high quality, because we the thing. And he yeah, so and so after that we realized, okay, you know, the signals from the interviews are all positive. We asked about you know, understanding the measurements process and how that works, and so that was, you know, the one area of risk is, like, will you really send in photos? Are people prepared to do measurements at home, for example? And the only way that we could prove that is actually to put something live on the internet. And so what we did was we built a homepage that explained the proposition, and then it was a very simple form that just said, you know, upload the photo of the suit that you'd like to make, here's how much it costs, and one of our customer service agents will get in touch with you. And that was the minimal product that we put out there. And as soon as we spent some money on Google to drive some traffic, and somebody said, hey, I'd like a suit, and sent a photo. Jonathan was on the phone, speaking to him on the phone, explaining to him, you know, can you just send us 3 photos of yourself with a couple of measurements? And we showed him some swatches of, you know, the different fabrics, and that customer bought the suit. You know, and so within 4 or 5 weeks, we had a suit delivered. Customer was very happy, was like raving about it. And you know, as soon as you sell the first suit, you can then go and sell another one. Like, you know, that there's that thing of like your first sale is the hardest. And every single time I've seen it, that you make your first customer, like the reality is you're going to get more. It's just a question of like how many more and how efficiently can you acquire those customers, but you will get more. You know, it does go from 1 to 5 to 20 to 100. I've never not seen that happen, which is quite interesting. So yeah, and then we kept driving traffic to the website. We interviewed every customer that ordered. We started to really dig into the sending of the photos as measurements. And it turns out actually that there was lots of people going, can I just send you my measurements? I'm not really wanting to send the photos. Or I don't feel comfortable just sending you photos. And I'm very happy to just take my own measurements. And so suddenly we realized, was like, oh, actually maybe the idea that this just has to be about sending photos wasn't the important piece here. So that's where you can go back to the canvas and say your solution has changed, right? It's no longer that. And we maybe don't promote that as much. And we then decided that people were buying, but they weren't, lots of customers were coming to the site, but not so many were converting as we would have liked. And one of the things that we changed, we said, it doesn't feel like an e-commerce website. People can't see suits. And some people had photos and other people didn't have photos. And so they were a bit stuck. And so then we built like more like a Pinterest gallery of suits on the website, where they could actually then look at the suit itself and check out and buy. And, you know, suddenly we did that, and suddenly it started converting better because people were familiar with it. It made them feel comfortable. And so, you know, that unlocked a new piece of growth. And now we're just iterating and developing that proposition. And they're now 12 months in. They are doing about £120,000 worth of suits every month. They've got their own little team. They're profitable and about to raise a seed round, and off they're going to go into their own, you know, into their own space. And, you know, and that's amazing. That's amazing to see that, you know, we've got all these boxes of suits in the office, and it's like, you know, they're going to go off now and, you know, hopefully smash it. And knowing that you've seen it from that one suit when everything was unclear and you weren't sure, to now everyone feeling quite confident, you know, there's something, they're going to do all right. And, you know, there's new things that they have to challenge themselves. How do they scale operations? How do they manage that? How do they improve their brand? But that's all part of the process.
Yeah. Yeah, no, that's fantastic. And we hear many stats, don't we, about new businesses and the failure rate and you know, how it's so difficult. It was always suggested, you know, the reason that most businesses fail is lack of cash flow. And that obviously is going to stem from lack of sales. Would you have anything to add to that at all in your experience, Dharmesh?
So most of the companies that we back lose money for the first 2 or 3 years in general, right? That's why they have to raise money from investors. Obviously, you know, they're going for a higher growth model. But, you know, in order to build a product, it costs money. If you're trying to acquire customers on Google or Facebook, generally you start off with a poor product that doesn't convert very well. So it becomes quite expensive to acquire them. And when you raise money from venture capital, it allows you to basically go, that's okay. I will acquire these customers at a loss. I will use those customers to learn how to improve my product. I'll keep improving my product until the point that actually I start to make money from them, and then I'm on my way. You know, and that can be like, the drop is an exception. Most startups will, you know, it could be 3 years, it could be 5 years, it could be 10 years, but because they're growing and growing and growing, where like making a profit isn't really their priority. If you haven't got venture capital, then you have to be more creative in how you acquire your customers. And you have to keep your costs lower. So, you know, paid advertising may not be the channel that will work for you. Maybe you have to, build a little community on Facebook and use them to like become your early customers. Maybe it's you hustling and going out the door and flyering to get your customers. So, you know, but the way that you acquire customers will be different. And but that will allow you to have a business where you can, like, you know, make money and actually sustain yourself.
Yeah.
That's the slight difference.
Yeah. Well, I can talk about my own experience when I started Escape the Rat Race, and I never intended that to be a business. It started as simply a monthly meetup event where in the first year, 1,000 people had joined. And from that, we then had the online Facebook community where we now have over 1,000, and it organically grew, and the community was so important. And, you know, I think it all comes from your passion, doesn't it, at the beginning? And we hear this term, you've got to be passionate about your business, but if you don't love what you're doing, then when the times are tough, and as you say, when you're not making money for an extended period, if you don't truly believe in what you're doing, it's going to get tough.
Yeah, I mean, definitely. You know, the startups are hard, stressful. Income is low. Like, you know, and it's lumpy, and it's like, you know, highs and lows, and you know, something happens, and you're like, oh, damn it, I have to go back to the drawing board. And yeah, if you're not in the right space that you feel passionate about, you know, how are you going to have the resilience to sort of fight through it, I guess. Yeah, totally.
Yeah.
And, you know, you meet lots of founders who, you know, they have a different model. They go for the consultancy, sort of, I'll support myself with the day job, and I'll find a way to maybe do a 3 or 4 day a week thing, and then use that bit of extra time to develop my startup so that I can still make a loss on it, but grow it slowly. You know, that's the model. You see the agency model where people start agencies, and then they have enough work that they can allocate, you know, 20% of their team to developing a startup idea and do it that way. Or you go straight out and raise venture capital. But, you know, there's a few different ways you do it to get started.
Yeah. Yeah. So Dharmesh, I have a question from the community, from Kerry Walcott, and it's something that I think probably crops up quite often in people's minds, certainly aspiring entrepreneurs who think they have the next big thing. And Kerry said, how do you go about protecting your ideas? And specifically for Kerry, she has a process, a certain way of something being done, which can have a really, really huge impact on business owners. And she knows that by herself, it's going to be tough, and that she probably needs to partner or find a joint venture with someone who can get it out there on scale. But then how can you trust that they're not going to steal that idea?
It's a hard one. So obviously there's things like scientific research where you can get patents to protect your idea. We have rarely invested in any startups which have patents, right? Like they just, not because we don't want to, it's just that we generally find that most people, when they do startups, are like, I have an idea, and the only way that I can protect it is that if I work on it and get it out there and then just keep building on it. I meet a lot of people that say, oh, Dharmesh, I've got this startup idea. Can you give me some advice? And then I phone them up, and then they say, yeah, but I don't really want to tell it to you. And I'm like, well, how can I help you if you're not even going to tell me your idea because you're worried that I'm going to steal it? Like, given that it's going to take me 10 years to develop this idea anyway, and I'm not passionate about it, it's your passion, you should not be worried about, like, you know, telling the idea, because the idea is just one part of it. I think if you've got a process, then ultimately you do have to think about like who that partner might be, and if they are going to be a threat, and that does happen sometimes. But I think the worst thing is if you don't start working on that idea and getting it out there, because that is the best way to protect your idea. It's like you start owning it and getting it out there, right? And it's very rare that someone will just look at it and go, I'm just going to copy that and off I go, because there's still lots of space. If it's a great idea, that you're still going to carve out a piece for yourself.
Okay, brilliant. Thank you for that. So we're drawing close to the end of our time together, Dharmesh. It's been fascinating, and there's so much more that I'd love to get out of you. And I know we're talking about hopefully doing some more later in the year for Escape the Rat Race, and perhaps some live workshops around the lean canvas model as well. What would be some of your final thoughts for someone who is in the 9-to-5, they're in the rat race right now, they've got an idea, they really truly believe in it, but something's holding them back, and it's probably fear, lack of self-belief, maybe lack of knowing exactly what the next steps are. What would be your one piece of advice for someone in that situation right now?
Speak to 10 or 20 people and then get something live. Put something out there in the world. Yeah. That would be, even if it's just a Facebook group.
Yeah. And I think that's been the theme, hasn't it, from today, is just customer is king. You've got to have that feedback, because whilst it's just floating around in your head, it's simply an idea. And You need to get that feedback. So that's great. Just take action, and you'll learn from that very process. Yeah. So Dharmesh, it's been a great conversation with you today. I'm sure that all the aspiring entrepreneurs listening right now have a much clearer understanding of how to get started with lean thinking now that you've laid everything out so clearly for us. So thank you very much for sharing that. Before you go, for those listening who would love to connect with you, learn more about Forward Partners, how you work, and I know you produce some great content which you put out on the blog, where are the best places online to connect with you?
Yeah, so on Twitter, it's Dharmesh R. So you can reach me there, forwardpartners.com. And we also write a lot of startup content on thepathforward.io, where we write a lot of this advice of like stuff that we're learning on how to build a startup.
Thank you very much. I appreciate your time today, Dharmesh. I look forward to chatting again soon.
Pleasure. Cheers.